Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday pre-Labor Day edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On the show today, we got our little jobs number coming out at 8:30. We had a big day yesterday in the biotech. We're going to talk about that sector. Big rally there. We have a couple of earnings still: LULU, Palo Alto Networks, AMBA, Brown-Forman. And then we'll take your questions in the chat. Maybe we'll address the Andrew left Bitcoin short. And our good guest today, folks, Greg Weldon. He is the CEO of CEO of Weldon Financial. He's the publisher of Weldon Live, a daily macro market research publication. He's also a CTA and author. Greg will join us at 8:35. Joel, how are we doing in the spoos this morning?
We are doing well, up 6 1/4. Your low of the day is the close from yesterday, 24.70. That's the key on the downside. We've taken out the high from yesterday, which is also multiple highs. All-time closing high, 24.7750. All-time high, not up until 24.8850. So we got a while to get to that level. Crude down a dime. Let's take a look at the crude chart. We haven't looked at a daily. Nice little run here, but this is basis the 15-minute chart. Let's see here. A little bit of resistance at yesterday's high, but not a lot until you get up into the middle 48 handle. And gold and silver will not roll over here. Gold trading up 340 at 325.60. Approaching the high of the move. Silver a little bit closer to 18 to 17, up 4.5 cents at 17.62. Let's bring in Dennis. Dennis, how you doing on this Labor Day Friday?
Pretty good. Now look at those biotechs on the Thursday before Labor Day Friday. Did you see those moves yesterday in those biotechs?
Well, first of all, though, you are going to do the show Monday, right, by yourself, because it's not a holiday.
Canada, it's Labor Day. Give me a break, Joel. He always says, Canadian. You think we don't have the same holiday? We have the exact same.
You don't have Labor Day. No, you don't have.
Yeah, we do, says the half Canadian. Yes, we do.
What about the 4th of July?
We have July 1st. He acts like he doesn't know this.
4th of July is not a holiday.
Canadian.
Wait, isn't 4th of July like something? Isn't that a thing? There's some holiday on.
Holy cow! You live like 10 miles. Spencer,
give me a break.
Canada.
I don't go there.
And you don't know when our Canada Day is. Our Canada Day is July 1st.
Thank you.
We just actually celebrate. Why do you think we had the yellow duck? We had the big yellow duck because we just celebrated the 150th anniversary, and we got the big, what was it? The $200,000 yellow duck, the 6-story yellow duck to celebrate.
I apologize. I apologize.
Okay, so Dennis,
we're right there. July 1st. What you're thinking of Boxing Day is on December 26th.
That's what I was thinking of.
That's what you were thinking of. So we have an extra holiday. We get Christmas, and then we also get Boxing Day, which is another holiday on December 26th. That's where you box all your gifts up and send them back to the store, the ones you didn't like. Boxing Day. I don't know if that's officially what that is, but
no, that's what I thought. I mean, that's kind of negative. That means you don't like your gifts.
Yeah, well, you don't tell the people you don't like your gifts. It's the ones you get the gift receipt for.
Whatever.
It'd be nice. I love this shirt.
Whatever.
I love this polka dot shirt.
Whatever.
All right, I'm sorry. Biotechs. Let's talk biotechs, Dennis.
We're trying to talk about something really awesome here, and you got to take and beat up Canadians on it. Biotech, IBB. Wow, blast off into orbit last 3 days, 310, 320, 330, 330, 335 to close yesterday, trading 333.90. Man, this IBB chart's incredible. I mean, these biotechs have just blasted off. Ever since Gilead bought Kite, they had to buy every biotech stock. They didn't just buy Kite, they bought Juno, they bought Bluebird, and then they decided to buy all the big guns there too, and even Gilead itself. It's been an incredible run here for the biotechs.
Let's talk Gilead. Well, first of all, let's talk the driver. Do you think that's the only driver behind that?
I think it's the main driver. You said for a long time the market wants growth with Gilead. It has a lot of cash. It's got a low multiple, but they don't have any growth. They got a big cancer drug from Kite Pharma with the acquisition of Kite, and the market is applauding it right now. That being said, is it getting to a point where I feel it's overdone? Yes. And that is why I actually did sell my Gilead yesterday. I know it's like I've been in this thing forever and it got back up here and it's like, but it just tacked on basically 10 points in 5 days. I've watched Gilead trade in 10-point ranges for months on end. I had to book it. So I know I should have listened to what I said yesterday. At least wait until it stops going up. But I don't know. I booked the game.
Well, you wanted to sell the day.
This was a huge loss. This was a huge loser for me. A little bit of loss aversion happening in my investment portfolio here. I don't talk about that a lot, and I don't typically play it. I will sell losers in my investment portfolio when I don't like the story, but this was a value trap for me for a long time, and I feel like it was a windfall here. I mean, they bought Kite Pharma for $11 billion. They've tacked on more than $11 billion in market cap since this move. So I just feel like it's overdone. Do I still like the company? Yeah. I'm just hoping I'm gonna get it back cheaper.
And you wanted to sell, I think, on Wednesday. And I said, wait.
I wanted to sell when it got to 80. That was always like, when it started going up at 70 to 75, I was like, you know what? This thing feels like it wants to go to 80. And if it gets back to 80, I think I'm going to sell just because it's been a good move. I mean, in June, everybody hated this thing. It was $63. Now we're 83. So the thing is just quietly up about 30% here. And obviously the big windfall here just in the last week when they bought Kite Pharma. So I booked it. I'm out of it. I'm going to try to get it back though. So it's kind of, I probably shouldn't be trying to, do that in my investment portfolio. I like to put stocks in there, not look at them for a decade, but I just feel like it's too much money too fast. I feel like I'm going to get a second chance to get this back in the 70s, and maybe not right away, but I feel like I might get a second chance to get this back.
But why would this ignite the entire sector? I mean,
everything.
Yeah.
I mean, you know what? Well, and especially two stocks, Juno, Juno, because everybody's, thinking, well, Kite got bought. Juno is cheap. It's like $4 billion company. It's bound to get bought. We know Juno took off from 30 up to $45, went up 50%. It did pull back from those highs, but wow, what a move. And then Bluebird Bio is the other one. BLUE has went from $100 to $125, tacking on 25% basically since this deal was announced too. I mean, Kite went up, 30%? Well, Juno went up more. And Bluebird Bios went up just as much. Pretty incredible when you think about it. So maybe they're plotting it that way. They're like, wow, they got Kite pretty cheap because Juno and Bluebird are taking off even more.
And one that we talked about and we missed, it almost had a gap fill. You got on me because I was too picky. Sarepta. Did you see what that did?
That went off. They all did. Everything took off. So if you bring up a biotech stock right now, or anything even like pharma related, really, like even some of the big pharma took off. Like the move in Pfizer yesterday, it was a 50-cent move in Pfizer. Pfizer never moves. Merck, Lilly, drugs are hot. This market's on drugs right now.
Merck still in that same trading range. Let's take a look at Pfizer. Haven't looked at it in a while.
That's big pharma, and that even caught a bid yesterday.
Ooh, look at $34 there, Dennis. Do you have any?
Those set up for a 2-day move.
Do you got any size in there at 34? You got anything in there?
I do have it open. Let me go check. So I'm going to the open book here. When we say size, I go to the book, the New York book on the floor. I'm looking to see if there is some size in the New York book at 34. Bringing it up here right now. Good call, Joel. There's actually 94,000 shares there right now at 34. 3403. That's a weird number. Not at 34, at 3403.
Hey, Dennis, we got some new listeners. Could you just explain the open book?
Because 3402 was a high yesterday.
Okay.
So we have another 94,000 at 3403. So it got right in front of it. So basically, think about it. It just takes, so when I'm talking about size in the book, so I'm looking at the order book for the NYSE. This order book does not become active until 9:30. The NYSE primary market does not trade in the pre-market. So what I'm doing is I'm going to the NYSE order book, which a lot of institutions still just trade on the primary market. They trade everywhere for the most part. There's some that just like the primary market. I trade a lot in the primary market as well. But 3403, I'm looking at it. It says there's 94,000 shares for sale there. That is a lot of stock. So if you just do the quick math on that, let's just round it up to 100 and say there's 100 there. Well, if the stock's $34, it takes $3.4 million order to take that out. So basically, somebody's got to come in to buy 3.4 million worth of the market as a whole to go higher than that. So a lot of times what you see is these big orders in the book tend to make stocks top out. And they also tend to, make stocks reverse at those points because if there's no 3.5 million buyer to take that out, it's going to stop there. So it's just supply and demand, and there's a lot of supply right there. It takes that out, and then sometimes it blasts off. That's why big whole numbers come into play too sometimes. Sometimes just institutional size sitting there in the book, and that can be like a stop. I always say like a goalie in hockey. It's like blocking it. And then, you get to buy it, and then, you score the goal, and then it moves on. But, 3403, 94,000 shares. That is significant. That's why probably the high was 3402 yesterday, right in front of it. It takes out 3403, which I think it might be able to do today, getting a running start at it. Then you look, 3410's got 12,000, but then, that's not much, And Pfizer really, it trades a lot of stock. So 100,000 shares for Pfizer isn't impossible. If it was 100,000 shares in a smaller stock like Juno, that's a lot harder because there's not as much money that's moving around in that stock.
Talk about how the high frequency traders too prey on those kind of orders for low risk.
Well, let's not blame high frequency traders. We prey on those orders too.
Okay.
I mean, all traders, I'll call them opportunistic traders, and some of them being high frequency traders will lean on those orders for protection because they know that it's got to take $3.5 million worth of stock to take out that 3403. So they'll try to put the short on at 34, 33.95, 33.98, saying, okay, well, I think it might top out at 3403, 3402. So, and in a worst case scenario, I think I'm fast enough that I don't think it's going to go in one mighty blow. If it starts going, I'll get out. So I feel like I can limit my risk there. High frequency traders can do it very well because they're so fast. It's hard for human traders to lean on big size now because it goes so fast that if you're not trading in milliseconds, you probably miss the offer. So really, that's why we say high frequency traders have a little bit of an edge here because they'll be fast enough to grab part of that offer if it starts to go. What's up? Well,
Flack UK
8:13 in the morning, Joel.
Flack UK is taking a sell on the open. Before we move on from this, just one quick note here. When you hit 34 at the end of the trading day yesterday, after a pretty big range day, there's a chance it's not going to get taken out that day on the close. But when you have a day where it closes at 33.92, right? So it only has 8 cents, 9 cents to travel to take out that level, and then more room on the upside. So look at it at the end of the day. If you see that kind of size there, more emphasis on it. But now it's getting a running start, more likely to take out that level today and trade up into the 34 handle. So just a quick trip.
And this sets up for a 2-day move. And I like the 2-day move. What the 2-day move for, we got some new listeners, just to explain it, is when a stock has a move outside of the norm. A lot of times you see follow through the next morning because there's traders that are, maybe, that weren't trading during the day. There's investors, the Johnny come latelys that come out and say, oh, look at how much the stock went up. I want to own that one. Call the broker in the morning and come in there. So that's kind of what's behind the 2-day move. But the 2-day move is just basically a continuation of the previous day's move for the first 15 or 20 minutes the next day. And I played this in AMD yesterday, and Brad's giving me some props, saying good call on this one. And I'll thank Jamie because he's the one who actually had the filter that gave me the AMD for the 2-day move. And I actually did say yesterday, I think this thing could go to 13. And I actually bought around 1268. I sold it just under 13 yesterday. So thanks to Jamie, and thanks for the props from Flack UK in the chat there on AMD. It did work out. Now you're up here another 17 cents a day. The momentum's going well here in AMD right now, but it's no longer a 2-day move here. So I sold it. I had it overnight because of the 2-day move. That's obviously, done now because we're past the first 30 minutes. So that strategy is over for me. And that's why I sold. It was just an overnight trade for me. Not saying I don't like AMD anymore. I mean, the thing's starting to have a lot more life. I think I'm a buyer of pullbacks here on AMD.
All right. So no earnings today, but we had some earnings action off the close yesterday.
We did. Lululemon, LULU. This thing was pretty wild too. It got the pop, a little bit of a drop, and then another pop. So LULU, Spencer, give us the details.
Yep, LULU Q2 EPS 36 cents. That beat by a penny. Sales of $581 versus $567 million. So a pretty good sales number there. Q2 comps up 2%. They're also raising their outlook for the fiscal year. Their adjusted EPS was raised and their sales was raised.
And Lululemon trading up at 60.85 here in the pre-market. I traded this a couple times last night. I always like to trade these, especially when there's not much going on in the overall market after hours. Sometimes the earnings are fun. So I had a couple scalps in there. Joel, tell us about the after hours action.
Crazy, absolutely crazy here in Lululemon, the yoga pants maker. Big old range. I don't know this. I don't have my minute chart. I don't know if it went down first or went up first, but what you need to know is that you put a double top basis of 15-minute chart at 62.45. You've backed off 2 points from that, so that high of the day could be in. Looks like someone has a little opinion here at 61. I don't know if there's a secret seller out there, but 61 looks like be a little bit of resistance right now. Let's look to the daily. I like to go to the daily into the 62 handle, see what we have. I don't see a whole lot. So if in fact you rally back into that 62 handle again, keep an eye on, what do we have here? Oh, I don't have my data window up. Keep an eye on your August 9th high is 62.49. Oh, that's pretty nice. Look how that coincides with your pre-market high. So when you get moves like this, if you have time to go check your dailies, may give you a good level. So that's a good one. That's if, in fact, we can clear out the seller at 61.
I think there's some love for this right now. Like, I do think, we've gotten to a point where some of these retailers, this one has performed better than a lot of the other retailers. And there is some love for some retailers out there. So I'm not sure, a lot of times I say every retail pop, I'm just fading and it gives it back. But Lululemon has had a little bit more love than some of the other ones too. They are a clothing maker. I know they have stores and malls, and we've always said the mall retailers are in a world of hurt here. But I feel like this is one that could actually has a potential to hold the gains. I've been a fader of a lot of these pops in the retail, but I think it could hold on. I think as long as it stays above 60. I'd be very concerned if it started to breach 60 here in the pre-market. So that would be my bogey. If I'm saying I think Lululemon has more gas in the tank, I think if it cut below 60, I don't think I want to be in it.
All right. Palo Alto Networks, Spencer, they had a pretty good report.
Yes, they did. PANW reported yesterday after the bell Q4 adjusted EPS 92 cents versus a 79-cent estimate. Sales of $509 versus $487 million. So he beat on the top, beat on the bottom. This either Q1 adjusted EPS coming in line with the estimate, sales in line as well. Fiscal year EPS in line, fiscal year sales in line.
Big pop here, a little bit of a drop. I traded this one a little bit too. I was just bored last night. I guess I was trading all these earnings plays. But PANW up 8.6% here in the pre-market. It's a big pop. Tell us about the after-hours action. We'll give you some sympathy plays too.
All right, so he's bored, so he plays $140 stock after hours. I mean, what do you?
Well, I waited for it to digest the earnings report. I didn't play right on the initial minute opening bar.
Okay.
So it found its levels and stuff. I played a little bit. I actually lost money on this one. I was actually up $1.50 on a scalp. And then I was like, I got greedy. And I thought I was going to start breaching through 140. And I thought I was going to give some of it back. And then it decided to go for another run. And I actually had to cut out. The whole key in trading these big movers after hours is have like a level, whether it's an iceberg order. And what an iceberg order is, it's some institution that's just dumping a big piece. When you can identify those in the after hours action, sometimes they really reverse off those. So that's how I usually like to play them. I like to have something to lean on. I don't like to give it much, and that's the whole key, because if you give it a lot, you can really get hurt in a hurry. So once you start getting red, I don't like being red in these things. Not red. I like it to be going with the flow. So, the iceberg is taken out, then I get out too. But anyways, getting a big pop here, 8.3% pre-market.
I'll give you the pre-market action, but I hope you're sitting down for this. Sean Udall likes this stock, and he texted me yesterday, and he knows I like to burn a lot of money sometimes in the options markets. And he was like, what do you think about this one? Because I knew he was bullish it. And I looked at like the weeklies. And of course, I don't know, they wanted like $5 or $6 for the 140. Absolutely ridiculous. And I looked out to the Septembers, and I said to him, I go, why don't you do a September 135, 145 call spread? And I think you could have gotten it for like 250, 275. And now who knows? These guys, I've been in some of these call spreads when you get a pop and you think, oh, I should be able to take this off for $9, but they don't let you out that easy. But Sean, if you're listening, I hope you caught that one. Good call. It's trading at 144.10. That's the high of the pre-market session. We've only backed off 30 cents, so we may have some more upside here. Going to the daily, you're gapping into a gap area. This chart's crazy. I don't know. 150, Dennis? That could be on the mind here.
I mean, it is. It's held up well. So it wasn't one that, a lot of times we've seen in this earnings season a pop and then a drop and then give it all back. And AMBA did that last night, which we'll get to in a second. But this one's held up. We've had a lot of hours. We've had it, 3.5 hours after hours last night, plus, all this morning since 4 a.m. But it's held on. So it looks to me like it wants to hold on here. And yeah, like I don't know, 150, but there's definitely some buyers here. It doesn't seem like it wants to give it back.
No, and 143.90, that was a high that you had. So I'll just keep an eye. I mean, if I had to give you one number in this one, I'd say 144. If it stays above 144, some chances to test that pre-market high. If not, like if you had some calls.
Well, it's not above 144 right now. You're talking the regular session.
Yeah. I'm talking about the regular session as well. So plus all the people that did take some of those option plays, 140 calls. I don't even know what they were going for on the weeklies. They can lock in their profits here. If in fact, should we check that, Dennis, to see what the weekly 140s are? We haven't done that in a while.
Go ahead. I don't have my option platform open,
I do.
But you have yours open?
Yeah, I'm on Think.
And obviously options, just to inform you, they don't trade till 9:30, so we have to look at yesterday's closes. So we'll look at what they were going for before.
These guys are good, Dennis. These guys are so good.
They're good.
Look at this. It went off. Let me get the last print here. Man, you just can't beat these guys.
This is why it's so hard to make money trading options, because it's like you get the call rate, you get the position rate, and it's like you're paying so much premium that you still don't make money.
It went off the board at 281.
Yeah, so here you get your direction right. Here you also get, and the thing's going 8% in your favor. And you're up, you pay 281, you're up like 30% in your option only. Yeah. I mean, that's, it's just the risk reward. The odds, and that's the thing with options, I make 30%. On a lot of your options, you lose 100% all the time. So I always say if you're buying options, you need to triple your money. You want that 3-to-1 risk reward, because the risk on an option purchase is usually all of it. So you're risking 100%. So you want to make 300%. That's how I was always playing options when I was buying options. But I hate buying options. I really feel like, we have Nick Shaheen on Tuesdays. He's, always selling options. I feel like that's a better way to go. I feel like option buying is just a losing, and there's going to be some traders who are really good at it. They find, the value, or they find, ways to beat the system. But it's difficult to be an option buyer and make money just for the premiums are high. You're always paying a premium. When you're an option seller, you're always getting those premiums. So that's why I feel like there's more money being made selling options. But you got to have deep pockets, because sometimes you're going to sell an option, and if you leave it open-ended, you can lose 300-400%. I mean, when you buy an option, you only lose 100%. When you sell an option, you can lose a hell of a lot more.
All right. Amberilla, they had earnings as well, right?
This was the pop and the drop. Spencer, details.
AMBA reported yesterday their Q2 adjusted EPS 48 cents. That was a 4-cent beat. 44 cents was the estimate. Sales of 71.6 million versus 70.45 million. So they beat by about $1 million there. They see Q3 sales coming in line with the estimate. And like you said, Dennis, the pop and drop.
And we got up. And what was the high yesterday after hours, Joel?
Amberilla. I'm just pulling it up on my different platforms. This stock, let me go to my 15-minute chart, and it got into the 56 handle. 56.50 marks your pre-market high, and then it was absolutely lights out. That 56.50 coincided with your 56.62 high from June 7th. Now you're trading on the lows of the session, 46.5. Takes out the former low of the move at 47.85. This is bad. The reason I say it's bad is because I'm going to go to the monthlies here. And boy, you were holding this support here. Ooh, boy, I don't know, Dennis. $40 over the next couple of days, or am I getting a little too greedy here? Oh, yeah.
No, you know what? It's always concerning when a stock has a pop and then gives it all back, and then it's right near the lows of the move. And you know what? We've seen some funny things happen. I don't think you're out of the realm to think this could go to 40. So I'm not coming in here and buying. I see a lot of air. Down here. I mean, 46.80 was your low of the year. That's a level it needs to stay above and hold. If it starts, and it is below it in the pre-market, I don't think you're out of the realm of possibility that this could have, a whoosh continued down to $40. So I don't know if it's going to happen today or not. I'm just saying there's a lot of air below. And when we look at the chart, what we're saying is, it's had a big run up back in, May, June, July of 2016, where it went straight up. Actually, I think that was just the beginning of June of 2016. Went straight up from 40 to like 55 in just a couple of weeks. And what goes up quickly can sometimes go down quickly when you come in that same area. I don't see a lot below that 46.80 number you're talking about.
All right, GoPro. We've talked about that.
We used to say there was, there's a sympathy move between GoPro and Amberella. AMBA obviously, is one that supplied some parts for GoPro, but GoPro's just been, kind of dead money. So I think AMBA is its own thing now. I can't see GoPro them just coming and killing it because AMBA didn't do well here. So I'm going to say no. I'm going to say I don't think GoPro goes down much on this.
All right. 24.76. SPOO's up 6 points. The high is just 2 ticks off that all-time closing high is 77.50. Dennis, it's 8.27. Now do you want to do one more thing or
we have jobs number coming up here? And I often like to trade the jobs numbers, but the jobs numbers have been a whimper here the last probably year. Like we get like 3 points of movement off the S&P. We just get like 15 points up, 15 points down, wild trading action all over the place, and it just doesn't seem to happen anymore. So I don't even know if I want to trade it. Every time I get off the show to go trade it, this will be the time that I actually don't get off the show and I don't go off the show to go trade the jobs number, and he actually gets some volatility. But I'm predicting crickets from the S&Ps.
Okay.
A 2 point up move or a 2 point down move.
So
that's what I'm predicting.
There's actually something a little bit unique going on this morning. I'm seeing this headline actually right now. There's the Labor Department is having some tech problems, so they're going to release the number online at 8:30, which is normal. But the difference is that I think today, that means that anyone who wants to access the number is going to have to manually go to the bls.gov website and scrape it. So algo's included. So I think they're.
So you're telling me I should go and trade this actually?
Because no, I'm saying that no one's gonna. Well, I don't know what that means. I thought I interpreted that to mean that no one is going to be able to trade this right away because there's going to be like a little bit delay in the information.
Did the Labor Department hire some of our technicians or something?
That's funny. Maybe you should go trade it, Dennis. Maybe you should. Okay.
I want to trade.
Okay, all right. You go trade,
so and I'll probably be back at 8:30.
Okay.
30, like 30 seconds after, because it probably won't even move. But I'm going. Okay, I'll be back when the volatility settles down. But I don't even think the volatility is going to pick up. See you guys in the future.
Okay.
And Dennis, if he loses money, Spencer, he's going to be.
My fault. It's going to be my fault. Okay, fine. Here we go. August non-farm payrolls, we are looking for an estimate of 180,000 jobs. Remember in July, we had that great 209 number versus 180,000 estimates. So July we blew it away, looking for 180 versus 209 is the estimate in the non-farm. Private payrolls 179,000 versus a prior reading of 205,000. Unemployment expected to remain flat at around 4.3%. I did see that if unemployment were to fall, it would be at its lowest rate since February of 2001. So 180 on the non-farm, 179 on the private is what we're looking for, and 4.3% in unemployment.
And I bring up a 1 minute chart. I never bring up a 1 minute chart here. I try not to look at anything less than a 15-minute chart, but perhaps we'll get some action here. Now, the pre-market low is 24.70. That was also your close from Friday. Just keeping an eye on that level. Pre-market high, 24.77. That's just 2 ticks under your all-time closing high of 24.77.50. And not much above that 77.50 to get this thing going to the upside here. Jobs report. And I
do remember also that we did have that good ADP number on Wednesday, private payrolls of 237,000 versus 185,000 estimate. That was from the ADP number on Wednesday. That was good. So do keep that in mind, Joel. I'm going to track the number down. I think we're out. Hold on a second.
Breaking news, August jobs report.
I'm still looking for it. I think it's a little bit of a delay, like I said.
Plus 156,000.
There we go. Thank you for that. Plus, so 156. Remember, 180 was the estimate there. So 156 coming a little bit lower, and we're seeing Bank of America spiking down a little bit. I'm seeing a couple leverage ETF spiking up a little bit. Gold obviously spiking up.
Ooh, so, look at the gold. We should look at that.
Unemployment rate 4.4%. Like I said, the 4.3% was the estimate. So a slight increase in unemployment month over month. We are seeing some movement. And then non-farm, just to recap, non-farm 165,000 versus 179,000 estimate. Private was 156 versus 180. And like I said, the unemployment was 4.4 versus 4.3%.
Well, gold moved here. You just spiked up to 1334.50. That's a nice move here in the gold market. Everyone was looking for that thing to roll over, and it didn't. Let's go to the daily charts in the gold market. Be careful here because you just exceeded that former high of the move in the gold market. Let me give that to you. You hit 1331.90, and that was on August 29th. You just hit 1334.5. So if you're trying to protect some profits on the downside, watch out for 1332 in the gold market. Now, I'm also looking, go a little bit longer out here in the weeklies. And you got some air. Let's go to the weeklies here, so if we can find a little resistance. You did 1340.60. If you want another target on the upside for gold, that was your high back in October. So gold getting lift. Actually, the SPOOs, I think, are in the exact same place that they were before the jobs number came out. Let's take a look at some of your financials, Bank America, see how it reacted to the report. I think this doesn't do much to change the Fed's outlook. What do you think, Spencer, as far as
No,
raising
nothing,
rates?
nothing too exciting. We did miss the estimate there for the non-farm and the private and unemployment actually. So it was a weak number across the board, but it doesn't do a whole lot for me in terms of
they hit this Bank America pretty good on this. The financials are getting hit on this.
Yeah, they did.
The S&Ps. Dennis, recap the trading action.
S&Ps moved 0 as predicted. Banks got hit. I trade a little Bank America, I trade a little bit of Citi. The banks got hit a little bit. And I mean, what we say is hit is relative to what we normally see is sometimes these things were around 1-2% a year ago. Now we say it got hit because Bank America's down a dime. But so okay, BAC's down a dime, Citigroup's down. They were all trading up though. S&Ps are up. So the banks got hit about 0.5% really from where they were. Some of them were trading up 0.1, 0.2%. Now a lot of them are down 0.3%. Citi's down 0.31. Bank America's down 0.33. Goldman went red here. JP Morgan slightly in the red. So they did hit the banks a little bit on this.
Did you do it because did you hit it because of the number or just because of the price the price action?
A price action. So I didn't actually, because the price action will actually happen usually before you get the numbers. So I had a little trade on there, nothing big. I mean, you're talking, there's not big moves here. So, if you get these 30, 40, 50 cent moves in Bank America, you're like, wow, that was a good trade. I mean, you make a nickel or a dime on something, it doesn't feel like it was even much at all. But, in this market, there's not much out there sometimes, especially in the dog days of August, which we're now on September 1st. So hopefully we're getting past these dog days of August.
We missed
What's
the dip.
that?
You should have been out just buying because it dipped. The S&P's dipped 3 points. That
BTFD.
Yeah.
That just keeps winning.
All right.
Man, BTFD.
We got a good guest coming up.
That should just be the strategy forever. Forget about all their strategies. I think that's the way everybody's making it. BTFD. Just works.
All right. We're going to take a quick break, and we're going to bring on Greg Weldon. He's the CEO of Weldon Financial and publisher of Weldon Live, a daily macro market research publication. He's a CTA and an author, and I think Downward Dog is the one that I recommend him coming on. So we'll take a quick break, and we'll be back with Greg. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we are joined by Greg Weldon of Weldon Financial, publisher of Weldon Live, a daily macro market research firm and publication, CTA, and author. Greg, how you doing on this Jobs Friday?
I'm doing great, Joel. Thanks for the invite. Happy to contribute.
Okay, so we always love to have floor people on the show, and you cut your teeth in the markets initially, working on the floor of the COMEX. Do you have a good floor story for us?
A good floor story. Well, the reason I got my job is a good floor story. I was actually visiting a friend of mine just out of college. I played basketball at Colgate, so tried to, make my way into the NBA. Wasn't able to do that, and ended up really not knowing what I was going to do. Studied English literature. I'm visiting a friend of mine. It was his birthday, high school buddy, on the floor at COMEX, to take him out for his birthday. And some guy just comes up to me and asks me about playing hoops. I'm 6'10", 275, some pretty noticeable figure. And we struck up a conversation. He was in his 60s, had played at Columbia when it was big time in the city, and we just had a conversation. And as my friend and I were leaving and taking him out for his birthday, I turned to my friend and I said, "This place is unbelievable. How do you get a job here? You certainly don't go to school for this." And he says, "We got to know somebody." I said, "Well, don't you know anyone? Is there anyone you can introduce me to?" And he goes, "That guy you were just talking to on the largest firm on the floor." So of course I do a 180 immediately, one of those life-changing moments where you just take action. And I went back and asked him for a job, and he called his son over. And this guy was 6'4" and in his 60s. And his son walks over and he's about 5'8", but with a presence that kind of separates the crowd as he moves. So you never define size by height, for sure. And he comes right over to me and he looks up at me and he goes, "Hire this guy." And I got hired simply because I could see over people into the booth and hand pieces of paper into the pit easily. So talk about cutting your teeth. I knew nothing and was thrown into the middle of mayhem. So it's trial by fire for sure.
And did you ever get stabbed with any pencils or break up any fights or anything? Did you ever get fined? Did you ever get fined on the floor for throwing trading cards?
I never got fined.
Really?
No. Certainly people got fined a lot back in those days. It was very physical back then. You see the pictures of the pit. Trading Places did a great job. They filmed down there while I was working there. It was actually a lottery to see who would be extras. So a lot of the people I work with are in that movie. And it's pretty realistic. A lot of fist fights. I never was involved. Anyone that's going to try and pick on me would be pretty foolish.
All right. So you're in the pit for a while and you leave the pit and you just happen to join or start working for a legendary trader, Louis Bacon. Talk about working with Mr. Bacon, what you learned and how it shaped your outlook and ways to approach the market.
Sure. Well, coming from the floor, the initial introduction to the market was kind of instinct and feeling and energy. And you really were able to grab all that being physically there and watching and hearing and feeling the energy change when things were happening. Then I went upstairs and worked at Lehman Brothers as a broker and learned that you need to know the fundamental information. What's happening? Clients are calling in. Why are soybeans tanking? Why is the Japanese government bond yield rising? All these questions. You had to know the fundamentals, the backdrop, the stories, the news. I work for Lewis, you just take it to another level where it's all about the risk management, all about aversion to risk and managing a portfolio aggressively. It's like playing high stakes poker, selective aggression and understanding the math, understanding all the numbers around the portfolio management, the leverage, and your aversion to risk, and then just his pure intensity in terms of wanting to know everything is, a hallmark of success for sure.
All right, before I give you the real tough question, you have your own independent, technical analysis system that you derived. We don't want you to give away the secret sauce, but could you just give us maybe a few of the key components in there, or technical formations? Are you a bar chart guy, candlestick? Tell us your approach to technical analysis.
Sure, Joe. Well, as you know, and we were talking about this before, the technical analysis is a small part of it because it's a blend. It is, digging deep into the data to get the real tidbits, like today's employment number, where, we'll get to that. And I'm going to give you some data details that are really, pertinent. getting those and then, creating the fabric of connecting all the dots globally, macro perspective to come up with a big thematic thought process. And then coming from the bottom with the technicals and hoping to meet in the middle in terms of, refuting or confirming your ideas as, then turning them into action. So the technical analysis, we do some quantitative work, which I use, algorithms I wrote back in the 80s that are very robust. We use the same, it's not optimized or anything. It's really kind of old school, but hardcore. But, we also do straight charting, all kinds of charting analysis. I love the math. So Fibonacci's are important, all the numbers that are involved. We do, a lot of moving average work, a lot of momentum work. So we're looking at that always. But then we have to blend that with the fundamentals. It's not just one-sided. Trading ideas don't come from just one or the other. They might be sparked by one or the other, but they need to be confirmed by everything.
All right. So you mentioned the jobs number. You mentioned the fundamentals here. Before we go to that, just give us your overall assessment of this market. Dennis and I have been in the markets for a long time, just never have seen quite the mentality you have here, buy the dip. In your opinion, do the fundamentals support the price action in the market?
Well, yes and no. Yes, if you want to talk about kind of where interest rates are still, and what the level of accommodation is globally still, then you might suggest, yes, it's still a asset reflation environment. But it's long in the tooth, man. It's old. It is coming to points where you're starting to see cracks develop. So, this bigger picture is just fascinating to me. I think what's interesting to me, and I don't hear a lot of people kind of put it this way.
I think he just accidentally hung up on us.
I think he did.
All right.
I was just getting good too.
Yeah, here. Hold on. Hold on.
Get him back.
Greg?
There we go.
Man, you've been hanging around this Benzinga crowd too long. All right, pick it up.
Yeah, there you go. Where were we? To me, the big global macro picture right here is interesting because it's almost like the U.S. is the risk point here. If you look at what's going on in emerging markets, there are places which are really strong, currencies that are very strong, the stock markets that are very strong. Chile is a great case in point. We've been long Poland as a second derivative of Germany, in terms of their export juggernaut there. It's been very successful. More recently, we got bullish on China, which has broken out as their economy starts to pick up. The risk point is the U.S., with the expectations for 3% to maybe 4% GDP growth that was supposed to be in place. The mechanics for this were supposed to be in place by the end of this year based on policies that, not only are not implemented, but are not really being discussed, to any real degree of seriousness. That's a problem. And the disconnect there is significant. As we know, we've been able to ride that up, and we were willing to be long the regional banks on the way up. We were willing to be long the home builders on the way up. We were willing to be long in the base metals on the way up. But at this point, it becomes a question of, how much of that is built on expected demand in the future, that right now the risk is it doesn't materialize, or it doesn't materialize quickly enough to satiate the patience level, let alone that the risk here in the U.S. is you have huge profits built up, maybe a misstep by the Fed or some kind of, maybe even monetary event in Europe could cause some profit taking. And when you're talking about stocks like Amazon and Google and, the big cap tech names that everyone owns, whether it's passive investment or specific directed investment, it's owned. People don't want to own them. The stocks are priced at $1,000 a share. The volume has dried up. You get a run kind of on those tech stocks in terms of people just thinking they're going to take profit. Starts kind of in a positive frame of mind. That could be a real accidental trigger. So the risk to me is in the U.S., both macro and even in terms of the stock market.
Yeah, but just like something like that we had earlier in the week where, North Korea, launches a missile and SPOOs open, the market opens up at the low of the day and closes on the high of the day and keeps going the next 2 days. It's just kind of hard to, find that trigger. We've had multiple, terrorist attacks. We've had a Hurricane Harvey flood. It almost seems like, that this market just, there's nothing. What could do it? Yeah. Is it interest? Are they going to do it with interest rates? Earnings were pretty good this quarter. I mean, it's just so hard to find out what that actual catalyst is going to be.
No, I hear you. And people become very preconditioned to buy the dips anywhere below 100-day exponential moving averages, a buying opportunity. But I think, North Korea aside, because to me, that's kind of a thing that's going to be either just disastrous or you're probably right to maybe shrug it off because it's almost unthinkable. But having said that, to me, it is risk that is centered around bigger picture stuff. And maybe the hurricane could be a catalyst. There's a potential catalyst here. If you look at what the front month gasoline futures have done, if you look at where supplies are, which are large nationally in terms of gasoline, inventories, but a lot of that's actually held in the Gulf, so you might have some transportation issues. But more importantly, they're very low in the West and the Midwest. So any kind of disruption could potentially, play into the consumer, which has already shown some propensity to be a little more defensive. The most recent retail sales report notwithstanding, most of the year has been very poor and subpar at best. So if you get a dynamic where, the consumer is borrowed against the stock market, where the rate of return is diminished, and the borrowing has been unprecedented, and it's directly correlated. So if you get a decline in stocks, the consumer's on the hook. You get a rise in gasoline prices here, even if it is temporary. And we're watching the spring contracts, which are breaking out as of yesterday. They had not broken out. The swaps soared. The front back was in a very high backwardation, meaning, trying to bring inventory into the market by paying higher prices for immediate delivery. And the back months weren't really responding until yesterday. So that's something that has to be watched too in terms of the consumer. Not only that, you link it back to the stock market. The consumer discretionary sector has been an upside leading sector since 2009, since the Fed went to QE. And now it's rolling over. It's breaking down versus the S&P. So if you watch the XLY, if that were to start cracking technically, to me, that would be a real warning sign of something more significant than, say, a one-off event out there as a risk, driver.
All right. And also, from your time in the gold pit, you wrote a book, The Gold Trading Boot Camp, that was published in 2006. Give us your outlook on the gold. It's just got to pop up to 1334.50, but we're starting to come in a little bit now. Give us your long and short-term outlook on the gold market.
Sure. Short term, our target for this move, and we've been bullish, was 1375. You got significant resistance at 1377. You've come a long way from 1205. So, from that perspective, it's, the bulk of the near-term move has probably occurred. From a longer-term perspective, this is a bigger picture breakout, in my opinion. It correlates back to the dollar, which gets back to the whole macro scene, the U.S., and the fact that the Fed is, still projecting 4 or 5 interest rate hikes by the end of next year, where we get an employment number here today, which showed a decline in weekly earnings, an outright deflation in weekly earnings. And all of a sudden, the pricing in the Fed funds futures is at 20 basis points between now and the end of next year. Meaning the market doesn't even believe now it's 100% odds of one rate hike between now and next year, and the Fed's saying 4 or 5. So that disconnect is a problem, and that relates back to the dollar, the whole macro scene. And to me, the next potential monetary event, particularly with a wobble in stocks, could be another doubling down of the Fed's dot plot. And if that happens, that's a bullish scenario for gold. It's going to be negative on the dollar, which is sitting right on key long-term support. So it kind of deserves a bounce. Maybe there's a pullback in gold, but those are going to be setups for the next big moves. Because if the Fed kind of, starts to talk a little less hawkishly, that could hurt the dollar. It's going to boost gold. Gold's breaking out. Some of the gold mining shares look phenomenal here. Even some of the lower priced, the big cap gold mining shares are breaking out with really great patterns. And it's a long-term bull move that goes back to 1999. 12 years up, 4 years down, perfect 50% retracement, now breaking out through the trend line that defined the down move since 2011.
All right, Greg, we're going to let you go here in a second. You wrote your own book, but do you have a book that you can recommend to our audience, perhaps a book on the markets that's helped shape your philosophy and your trading style?
Well, I know that you guys do some technical, systems work. So Perry Kaufman wrote a great book. I'm old school, so most of the books I read are older. But, anything on the psychology of trading is good. I think that, Perry Kaufman's book on building trading systems is a good kind of starting point for neophytes. And, who doesn't love the Market Wizards books? Jack Swagger's an old friend of mine. Those books were really influential on me, telling stories and, when you talk about kind of mimicking some of the patterns of successful people in terms of being around someone like Louis Bacon, who was friends with Tudor Jones, and just reading about these guys in the books, it's phenomenal stuff. So any of those books to me are recommended reading.
And I guess we kind of already have the answer to this, but if there's one sector out there that, regardless of the recent price action, you're looking out 2 to 3, 5 years, there's one sector where you had to put a good chunk of money, what sector would that be?
Wow, that's a great question. I mean, from that kind of long-term, almost demographic, global fundamental situation, I'm always interested in water and biotech, along with nanotech stuff. So, to me, those are always long-term investments where I'd be looking for some kind of idea that makes sense in terms of kind of, being what they call now a disruptor.
All right. And if there's one, I think I know the answer. If there's one sector, group of stocks that you would avoid or just be tempted to lay out a short, what would that be?
Most of the rest of the U.S. right here. I mean, outside of the metals. I mean,
Okay. That's an honest answer. We've been speaking with Greg Weldon, Weldon Financial, publisher of Weldon Live, macro market research, CTA author. It's great to get a macro outlook on the market. I think sometimes we maybe overlook that in our show, but Don Wardog in the chat recommended to us. Thank you so much for your time. And I certainly hope we can get you back on again.
Sure. My pleasure. Anytime. You guys do a great job.
Okay. All right. 8:53. Dennis, I'm sorry. I hope I didn't neglect you there, but that was such a good interview.
You were just flying. I was going to come in, but I was like, Joel's all over this. So we'll come in next time Greg's on. I'll have to get some interview with him too. He is great. That was a great guest.
Yeah, that was a great interview. And I do want to say, we've had a few times in the past where, listeners in our chat and elsewhere have suggested guests to us. This was a great suggestion. If you have any more suggestions, anyone you think we should get on the show, anyone that you follow, anyone that you read or you watch, let us know, because that was great. So if you want someone to come on our show, just tell us, and we'll do our best to get them on, because that was great.
I tell you that when we didn't go a lot into it, but like the pit clerks. Okay, your back is faced, the brokers are behind you, you're facing out towards the pit, and he could see over everything, the price action quoting the market.
That's awesome.
And then also and then he used the term handing the paper over. And that is basically, I've mentioned this before, I would hold a deck of paper and it would have orders on the upside and orders on the downside. And then you would be responsible, for when the market moved to give those orders, to your broker. And then sometimes I wouldn't be paying attention and they'd blow right through the deck and all these orders would be filled. And I'd be like, I turn to the other clerk. I'm like, I'm going to go take a break here and then, get out of there. But great floor stories there. We'll get Greg back on again. Dennis, we got to talk Bitcoin here. We didn't listen to Jeff Goldman, who told us to buy it, right? Andrew left.
Is Jeff still in?
Yes. Yeah.
Wow, he's rocking.
Yeah.
Rolling,
He's
been in that a long time.
Well,
Where did he buy it originally? What did he say when he bought it? He was like in like the triple digits he was buying.
Yeah, he tried to get me buy like 200-300, and actually what he did.
300.
Yeah.
Is he retired now, Jeff Goldman?
Well, he sold some of it. I asked him. He goes, "Well, I'm going to trade around my position." He also had what is it, Ethereum? Is that another one? And he has a little bit of that. He was doing some scalping, and then what he did is it's really complicated. But basically, he put it like in a wallet, and now that he can't touch it, and he's going to pass it on to his wife and his kids. I'm like, dude, what if something happens to you? How can they, get it? And he goes, he left instructions. But Andrew Left is coming out now, Dennis. Some people have been asking about, shorting the Bitcoin investment trust against it. Andrew Left comes out negative on this one.
Yeah. GBTC, because it's trading at such a premium to where the net asset value is. So basically, this GBTC owns Bitcoin and it's trading for, where is that? Over $1,000 here now. But the net asset value of the Bitcoins they own are only worth like $500. So you're basically paying like this 120% premium here for over what the current value is. So a couple arguments here, and I listened to the Left interview on CBC last night. It was excellent. his argument is, the fact that the spread, even if you are still, bullish Bitcoin, which he was saying, I don't think he was, the spread needs to come in is what he's saying, so he's saying a little bit long Bitcoin, a little bit of short GBTC is probably the play, because when there's more ETFs that come out here to track it, they're going to track it more closely, and this obviously is one of the only ways to play it from on the exchange, or it's on the pinks, but it's one of the only ways to play it from an exchange perspective here right now, and once he does get some ETFs and they do get some other tracking, that this spread is going to tighten. So he disclosed that he's short the GBTC and long, it's partially hedged by longs of Bitcoin against it. The one problem here is the borrow on the GBTC. I just tried to locate in a couple different spots. I could not find a locate on that. It's on the pinks. If you do find it, it's probably going to be expensive. So to be able to short it itself is probably very tricky. If you can put it on, maybe, there's a trade there. But then the other thing is, this spread was like 60 or 70% a little while ago. It's 120. I mean, it's still blowing out here too.
Yeah.
Spreads can blow out. They don't have to come straight back in. Just because you identified 120% of, premium you're paying on the thing doesn't necessarily mean it's going to come straight back in. It could continue to blow out for you. So there's still risk in, putting on a trade like this. Andrew left his deep pockets. He's made some fantastic calls, obviously. He probably has some connections to get the borrow on the GBTC a lot more than, your normal trader does. So I think that's the biggest hurdle, is if you're playing that spread, the borrow on the GBTC will be really tough.
Prohibitive. Yeah, I mean, I've missed the ride on this one.
I have too. And you know what? You can't, and this is, I have traders come at me all the time, and, some people are like banging their head against the table. Why didn't I buy Bitcoin? Why didn't I buy Bitcoin? If you're doing that, you can always be doing that. There's always some train you're not going to be on. And I say, how much that bothers me that I didn't buy Bitcoin? It bothers me zero. It doesn't bother me at all, because there's other things to trade. There's always trains moving. You just have to identify, this is something that I don't know enough about. This is something that I don't know how to value. I've talked about this before. It's just numbers to me. So, is it worth 100,000? Is it worth 1,000? I don't know. Is it worth 100? I don't know. So I just don't play it. I play other things that I know, other things that are in my comfort level. This is outside my comfort level. Why chase something? Why go into something that's outside your comfort level? If you're a Bitcoin trader, if you're a Bitcoin researcher and you're all over this, good. That's what you need to do. You need to do your homework. I don't feel like doing my homework on this because I don't understand it. It's not easy to trade. It's not exchange listed. And there's other trains out there. So don't bang your head against the wall, because your friend told you about Bitcoin at $500 and you didn't buy it. There's other trains. There's always something else that's going to move. People say, oh, nothing will move like Bitcoin. And this has been a huge move. I mean, it's been an exponential move here. But there is always a new trade. There's always another trade right around the corner. Lots of opportunity in the market. That's the awesome thing about it. I've learned in my 18 years, don't bang your head against the table in the trades you missed. Just look, learn from it and look for the new opportunities.
All right, 8:59 here, 55 seconds. Dennis, I know you want to trade the open and then start ripping up some carpet at your house. So
I know.
I got a fun weekend, but take care of that.
Fun weekend. That's what I'll be doing all weekend, is getting my parents have done a lot of the work for me there, but I'll be trying to obviously get, my flood in Windsor. And if you haven't Google Windsor flood, and you'll see there's 3,000 basements that flooded in Windsor. And unfortunately, my basement was one of them, and I was at my cottage at the time. So my parents have been dealing with the headaches. I'll be dealing with the headaches of this weekend. So, and trying to get the smells out and the old carpets and the floors, and then trying to make sure it doesn't happen again.
I'll tell you, between Windsor and Houston, go long flood insurers. I mean,
I know. Well, or go short flood insurers. They're gonna have to be.
Well, true. You're right, exactly right. Okay. Actually, I'm gonna air another interview right now. Yesterday, we aired an interview with a guest that'll be at our FinTech Benzinga FinTech Summit on the 28th. His name was Matt Ambrose. And today I want to air another one. This fellow's name is Andy Ambrose. He is the founder and CEO of a company called Liveoak. So I'm going to air this interview shortly. Andy will be at the Benzinga FinTech Summit, as I mentioned. So this is an interview I had with Andy Ambrose, founder and CEO of Liveoak.
Welcome back, everyone. We're on the line with Andy Ambrose. He's the co-founder and CEO of a company called Liveoak. Andy, how's it going today?
Doing great, Spencer. Really appreciate getting to chat with you here.
So I guess at a high level, explain to us what exactly you guys do.
Yeah. So Spencer, essentially Liveoak is a enterprise software platform that we provide enterprises with remote onboarding and identity verification tools, essentially in customer onboarding transactions that are very complicated in highly regulated industries like financial services.
Any chance you could sort of elaborate on what that means?
Yeah. So, well, if you want to just think about, take a second and think about if you bought a house, a real estate closing that had multiple documents and multiple people, and it was a lot of information gathering that it took to get a transaction complete, and you ended up having to do it in person. Same thing goes if you think about if you've ever, say, rolled over a 401k plan from one company to another or to an IRA. There's a ton of back and forth for the traditional paperwork. And essentially what we've done is we've created a platform that's a next generation conferencing and collaboration room that allows you to not only connect and collaborate with customers, but you can conduct business and complete the transaction in the context of that conference collaboration room. So effectively bringing what normally would have required a face-to-face meeting to accomplish it, you can do remotely through our collaboration software.
So can you elaborate sort of, Andy, on the uses that you've seen for your technology, specifically in the capital markets and in financial services?
Yeah, I appreciate that. We're still an early stage company, but we've got a couple of really fantastic use cases that are in play right now. I'll give you two. One of them is a global bank that is using us for wealth management customer onboarding with international customers where they historically they don't have branch physical presence in 70 countries, and they historically have required multiple steps, which included a customer going to the embassy in their country to validate who they are. So with the use of our software, in this use case, the friction that we're solving has more to do with authenticating that the person is who they are and their documentation is correct. But they're able to launch a remote onboarding experience that removed many of those steps in 70 countries. And we're really excited about the results that they're seeing. The other use case I'd love to share is we're working with a company here in North America that has institutional customers that they onboard. And if you think about corporate onboarding, there's more documentation that's required around validation of who is authorized to act on behalf of the company. There's multiple parties who are contributing to information. And in this use case, there's a intense need to decrease what the industry refers to as not in good order with their account onboarding. So we're effectively enabling this organization, which was in the past sending a packet of as many as 7 different forms out to as many as 5 different parties to complete. Now, all those parties can join a secure conference and collaboration room, complete and synchronously edit and fill out these forms and actually sign them in the context of the conference. And what we've seen is there is what used to take on average 73 days has been reduced to, in many cases, down to days and hours, being able to do this all in one setting.
Now, Andy, you're attending, obviously, the Benzinga FinTech Summit. And I want to ask you about the panel that you're going to be on. You're on a panel, the collaboration tools panel with Symphony, OpenFin, and then you guys as well. What exactly are you going to be discussing on that note?
Yeah, I'm really excited about the opportunity to work with the other panelists. They're clearly solving very, very big problems that are around the sort of regulation and the infrastructure. And so I think we're more of sort of the front end of the customer experience. And our solution solves kind of that front end of the conversation, and it marries into a lot of different back office processes. All of the entire system has to kind of communicate from start to finish. So what we're seeing is, and what I'm prepared to really kind of share, is that we're hearing over and over again that large enterprise financial service companies are looking to streamline all of their business processes. But what's a common theme is no one believes that they're going to completely eliminate the human expert. And I think that's really something that we've figured out in our own experience, spending decades in the financial service industry ourselves, is that when it comes to complex type of transactions, there will always be a need for the human expert and that element to make a transaction happen. So what we're doing is we're bringing that human element and marrying that up to technology to make the experience a perfect blend, if that makes sense.
Yeah, it does. And then you're also exhibiting. So what will you be sort of displaying at your exhibit?
Well, what I would love to do, and we're prepared to do, is a live demo for anyone who can spend 5 minutes over at our exhibit booth. So we'll have a chance to kind of share high level what we're solving in the panel. But I'm going to be there with the ability to show anyone who wants to see it in action, a demo. So if you're actually going to be attending the conference, we would love to chat during a quick conversation in one of the breaks.
All right, Andy Ambrose, again, he is with Liveoak, and the URL there is liveoak.net. Andy will be at the Benzinga FinTech Summit September 28th in San Francisco. bzsummit.com is URL for that site. Andy, thank you so much for joining us today.
My pleasure. Thanks so much, Spencer.
All right, and that's our show for the week, folks. So I hope you enjoyed this week. Hope you had a good week as far as training goes. Hope everyone has a nice long Labor Day weekend. I will be out of here on Tuesday, so please, Joel and Dennis, don't burn anything down. But I'll be back with you folks on Wednesday. So again, have a good long weekend, everyone, and we will see you guys next week.